Okay, let us continue with top-down analysis for next week. Okay, that is Goldie. Last week we took a long position from that 30-minute demand, took a buy from that area, and our target was around that high, but our final TP is around that area. It is around that area for long term. Okay, so the bias is bullish. Let us start with the weekly time frame to reanalyze so as we can get a clear picture. Let's start with the weekly time frame. So on weekly time frame, here we are in distribution move after that manipulation. Let me show you very clear. That is weekly time frame. On weekly time frame, here we have this manipulation candle on weekly time frame. So we are in distribution move until price it take out this what CRT high. Weekly CRT high is around 50.34. So now we are in distribution move. So we have to find buys also for next week. We have to find the buys. Okay. So shift your time frame to lower time frame. For our time frame, there's market structure like this. On 4-hour time frame, we have break of structure means continuation. Break of structure here means continuation. Break of structure, both break of structure here. And then after break of that structure, you see price created what? Price created correction or corrective move or retracement, and then another extension. I think that is a inducement. That is inducement. Price will drop later to sweep that inducement, and then we can continue. We will continue with the uptrend, and then we will continue with uptrend. So let us use Fibonacci here. When you use Fibonacci retracement from that point to that point, recognize that retracement already reached 50%. All right, it is already activated 50%. Also, it activated 0.6 optimal entry level. Okay, so that is just inducement. Let us shift to 1 hour time frame to find if there is any point of interest remaining below here, which it can attract a price to move towards. Okay, so on discount zone here on 1 hour time frame, there is unmitigated demand zone around that area. There is unmitigated demand zone around that area. So this is inducement. That is just inducement. That's just inducement. And then price will drop later. Price will drop to sweep that inducement. After that liquidity sweep, wait confirmation around that area, and then we enter a long position. We enter a buy from that area. On Friday, we took some short position around this area, from that 1 hour supply zone. We see very good reaction from that 1 hour supply zone. So we hold this position, short position from that area, from that supply, and then our target is around this area. So I think on Monday, price will drop until this on our demand. Price will drop until it mitigate this 1 hour demand, 1 hour demand zone. After mitigation, we'll find buys from that area. After mitigation, we'll find buys from that area. Our target TP1 will be around this liquidity. TP1 will be here. That buy side liquidity is 48.56 level. 48.56 price level. And then next target, it will be here on that weekly CRT high. That will be a clear target. It will be a clear target for gold. Okay. So that order block has high probability of price reaction, high probability of price to react from that area. If price will open the gap upward, rate mitigation, and then we'll continue with uptrend because price already retraced to 50% of optimal entry zone when you use FIBO. So the bus is bullish. So if price will open with a gap, wait mitigation of gap, and then continue with uptrend. But for now, if there is no any issue, uncertainty issue, we have to wait mitigation of that on our demand, and then you hold it. Hold buys from that area, target 50.32 final. TP1, it is 48.57. 48.57 TP1. TP2 is 40.32. Okay, that is it on gold. Let's see US 100 Nasdaq. Nasdaq last week, Nasdaq and US 30, we saw a buy last week. We took a buy from that area. TP not yet. A lot of pips in profit. TP not yet. So for re-entry here, you have that clear and mitigated support level. So I have to wait retracement to that support area, and then we'll get another re-entry around that area. Okay. Here we'll get another re-entry. US oil. US oil is bearish. US oil is bearish. It's bearish. US oil is bearish after Iran and Israel war, or US and Iran. Iran, US, Israel. Or what? Israel still, they are in fighting with the what? Lebanon. So they do not relate with the Iran. So here we're talking about Iran and Israel war. So they solved the issues last week by opening Strait of Hormuz. So it leads to oil price to drop. Okay, so expect also next week oil price will continue to push or to drop down. Oil price will continue to drop down aggressively. You see, technically here we have that structure, have this break of structure means continuation of trend, continuation of downtrend. So here you can see mitigation of that 1 hour, mitigation of that 1 hour order block here, mitigation of that 1 hour order block. So target to be on these lows. Here we have this sell side liquidity. Here you have that sell side liquidity around that area. So also here we have another liquidity. So expect oil will drop until take out that liquidity. It is very clear liquidity zone, very clear liquidity zone. So after liquidity sweep, later we'll find the buys on US oil. But for now, you see the market structure, oil is bearish. So we have to find short position only. Okay. So that is it. That is it for next week. Account management is available. Initial amount is 1K because we are trading gold mostly. So initial capital is 1K. Also, premium group is available for more setups and accurate setup every day. Every day. So you're all welcome. Don't forget to subscribe our channel and share to each other.